Welcome back. The World Bank has upgraded India's GDP forecast to 6.9% in financial year 2023. It said in a report released on Tuesday that the Indian economy is expected to grow 6.9% in the current fiscal year. Earlier, Indian economy's growth in this fiscal was pegged at 6.5%. So that's the revision we are talking about. The report has upgraded the figure due to quote-unquote robust economic activities in India. The report sees average retail inflation at 7.1 this year. India's GDP forecast for financial year 23, however, is lower than 8.7% for the financial year 21-22. As it says, India is affected by spillovers from US, Euro area and China. The bank projects India to be one of the fastest growing economies. It said the slowdown in emerging economies could also position India as an attractive alternate investment destination. So a lot of optimism that this report has generated. To talk us through the important points here in this report, I am joined by Mr. Dhruv Sharma, Senior Economist of the World Bank. Very good evening to you, Mr. Sharma. Thank you so much. A pleasure to have you with me on the program. Mr. Sharma, a number of agencies do growth forecasts, but the World Bank figures are given a certain legitimacy, a certain primacy. And like I said, it has generated a lot of optimism because the growth figures have been revised. Not only that, there are a couple of other pointers with regards to growing investments as well. Take us through, the important parts in the sense that when we say, since the report has spoken about robust economic activities, it has also spoken about how India has dealt with global shocks better than the other countries. Would you like to explain to us how India has fared better? That has in fact led to this revision in figures.
Sure. Thank you for having me. Look, there are a number of reasons. Our report makes a particular point about the term resilience. India's economy has become more resilient than it was several years ago. A number of reasons for that, including certain policy decisions, the buildup of buffers, and policy space and policy credibility. A number of measures have been taken over the last decade or so that have put India in this position. India is not immune to what is happening all around the world, but it is better placed to deal with some of those challenges than other emerging market economies in particular. We have, as you mentioned, upgraded we've revised our growth forecast for this fiscal year from 6.5% to 6.9%. That's partly a reflection of our assessment that what was expected to happen this year with global growth prospects, it's not perhaps as bad as initially thought several months ago. However, we did revise our forecast from 7 to 6.6 next year, and that's a reflection of the fact that we expect deteriorating conditions globally to weigh on growth prospects a little bit more next year.
Okay. Right. Now, also, since we are looking at this figure and drawing inferences about how these are important pointers that the economy is on the right track, the revision, as the report says, is also based on better than expected second quarter numbers. Now, here is where the caution comes in, because we've spoken to other experts who say that this is the quarter where you had the festive season. There was, of course, a lot of spending, and that always is one of the biggest factors when it comes to India's growth factors. So what is the kind of caution that you would like to sound in this?
Yes, when we say it was slightly better than expected, perhaps you could say we were a little bit on the conservative side, but a number of factors, strong private consumption and domestic activity did contribute to our revision. And, cautionary things to keep in mind include inflationary pressures are still quite elevated. Yes, we do expect inflation to moderate over the course of next year, but at the moment they are a bit above the RBI's comfort level, and that's something to watch out for, because it may play a factor when it comes to consumption decisions going forward. However, we do expect inflationary pressures to ease over the next year or so. At the moment, they're elevated, but we expect it to come within the tolerance band at some point next year. Global
right.
commodity price cycle is also something to watch out for. Of course, we all know the story that crude oil prices have come down over the past several months, but given high input costs can have an impact on economic activity, it's something to keep monitoring, not to be alarmed about, but to keep monitoring.
Okay, that's a nice way to put it. Not to be alarmed about, but keep monitoring. In fact, the report, Mr. Sharma, has said this, that continued vigilance is required as adverse global developments persist. They're not going anywhere. The recessionary trends that are visible, that we need to watch out for, and as you also have mentioned it, how best do you think we can navigate this storm, not to rock the boat, the achievements that have been made so far?
Sure. Look, we made a point in our report that thus far, the measures that have been put in place, policy measures, have been balanced, have been appropriate, and have been measured. So the decisions that the government make via fiscal policy or monetary policy, thus far, our assessment is that they've been measured and balanced, and one would expect these to continue over the course of the next year. This would, of course, help India navigate all the challenges that are happening. India does have some buffers as well, and we expect those buffers to be drawn upon as well.
Okay. Right. I mean, these are important points that you've made, Dhruv Sharma. Really appreciate your joining us here on the program and for explaining to us the salient points from the World Bank report on India's GDP. Thanks very much.
Thank you.